Thank you for downloading this RealAgriculture podcast. Excite your crops with inputs from Excite Bio. Access nitrogen and phosphorus with Excite Bio's lineup of inoculants and ag biologicals. Since 2010, they've been helping farmers harness the power of the soil. Learn more at excitebio.ca. That's XITEBIO.ca.
I'm Shaun Haney, and this is RealAg on the Weekend. Let's get real and get connected with the week that was in Canadian agriculture. RealAg on the Weekend starts now. Welcome to RealAg on the Weekend. I'm your host, Shaun Haney of RealAgriculture.com. Hope you had yourself a great week. It is great to be with you here today. You're, of course, listening to 650 CKOM and 980 CGME. Encourage you over the weekend, of course, to check out RealAgriculture.com. And if you're looking for some extra listening on top of this program, make sure you download the RealAg Radio podcast. Okay, we got a great show for you here today. Lots to chat about, lots to dig into. One of the things I'm most looking forward to doing is going deep into the new results of our Canadian Farmer Sentiment Index for January. Okay. And there are some key trends that I'm going to talk about. And I've been traveling across the country this week. I spoke in Brandon, Manitoba at the Manitoba Beef Producers. Also spoke to a group of CCAN soybean dealers in Cambridge, Ontario on Tuesday. And I would say based on conversations I had with the audiences there, they reinforce some of the data that we have seen in the Canadian Farmer Sentiment Index for January. We're going to hear an interview with Machinery Pete. Greg Peterson is going to be with us, talk about we're actually starting to see in certain categories a little bit of a change when it comes to used equipment prices. I don't think it's going to hurt any of your feelings out there. If you have any feedback on today's show, send me an email, shaney@realagriculture.com. You can also find us across all the different social media platforms, or you can call the RealAg feedback line, 855-776-6147. Okay, Canadian Farmer Sentiment Index. Let's talk about it. So now, just to reinforce what we're talking about here, what we do is we go to Canadian farmers across the country, 550 of you, from across basically the prairies into Eastern Canada, answered the January survey. And it gives us an idea about how you are feeling about things. So what's on the mind of the farmer? This is really the farmer's voice, right? So instead of just sharing a bunch of anecdotes, this really, really encapsulates what farmers are experiencing right now when it comes to their financial health, their confidence in marketing, how they see the markets, a willingness to invest capital, and as well, mental health. So when we look at current farm financial performance, this is something like, how do I feel about my financial performance today of my farm versus 12 months ago? We have been on the decline across the country. I also want to make this point, okay? Because I think based on the drought conditions we have in Western Canada versus what's happening in Eastern Canada, you're probably going to say, yeah, the Western Canadian numbers are way worse, Shaun. Way worse. We're in a much tougher situation. And I'll be honest with you, when I compare in all of these categories, East versus West, they're virtually the same. There's slight differences, but nothing that is you could say they're the same, okay? Which I find very fascinating, especially based on the cropping success or better crops that Eastern Canada has had the past 2-3 years compared to what we have seen in Western Canada, and that overhanging drought. I don't need to tell you about that in Saskatchewan. The drought it feels very real and it's tangible for many of us. So when we look at current farm financial performance, basically since this time last year, we have been on the downward decline. January of 2023 was a 119 out of 200, so we were in positive territory. And basically, since May, July, we have just slid downwards. So for January 2024, we're at 86 out of 200. We're in negative territory. Now, farmers have always, since we started doing this in September of 22, farmers have always felt better about their current farm financial performance than the future farm financial performance. Okay? The future is always more negative about the future. And the trend has been that current is sliding downwards and the future has been slowly creeping upwards to where they're both virtually the same number. Well, they're not the same. Current is still higher than future. But what's happened is they've come together almost like a sideways triangle, trying to find that apex. And then in January of 24, they've rolled to the downside together. Fascinating. When we look at optimism towards the Canadian ag economy in the next 12 months, well, we have widespread good times, widespread bad times. What we have found here is extreme negativity. Farmers feeling overall, not just their own operation, but the ag economy in general, 44 out of 200. Lowest number we've ever seen since September of 22. Record, since we started doing these Canadian Farmer Sentiment Index, we've never seen a 44 on this question. Big time steep decline. When we look at that same question, but we put 5 years, okay, will the Canadian ag economy have widespread good times or bad times in the next 5 years? It's a 56 out of 200. So slightly better than the 12 months, but that's 5 years, people. So you can really feel the negative tone right now out there in farm country across Canada. And when I look at the open-ended responses, there is some clues here, okay? I would say 75, 80% of the open-ended responses, when we ask them why, they mention either Prime Minister Trudeau as a reason and liberal policies, or they specifically mention the carbon tax. Okay, so I described when I was speaking at the Manitoba Beef Producer meeting earlier this week, it was on Thursday, I said we kind of have carbon tax on the brain, where we've thought so much about it, it's now very, very much a block. It's a cloud hanging over the industry. And 234, that private members bill, getting stalled in the Senate, and now it's back in the House, and it's being, it's continuing to find ways to not make progress. I think that has really been, I'm not going to say nail in the coffin, but it's really, really created a lot of frustration. And talking to some farmers this week, almost a sense of hopelessness. And is the carbon tax the reason that somebody's going to make or not make money this year? I'm not sure about that. In some cases, possibly. I think the dip in the commodity market and fertilizer not coming down as much is probably more so of a reason, but farmers are very focused right now on the carbon tax and really buying into the conservative messaging of let's axe the tax. Now, considering that downward decline, when we look at current and future farm financial performance, what we're seeing is not a lot of change when it comes to confidence in making farm investments. So is now a good time or a bad time to be making capital investments? Things like buildings, things like land, things like that. It's really held between, since September of 22, we were at a high of 59, and right now we're at a low of 50. So not a lot of change when we look at that question. I think it's kind of interesting given the fact that over that time period, we've seen rates go up. We've seen the Bank of Canada, kind of stall and wait to see, kind of a wait and see attitude when it comes to some of the data. And farmers, the rating really hasn't changed. So even with the slide down in their current and future farm financial performance, they're not really changing how they feel about making farm investments. But not a very good rating either, feeling very confident. It hasn't changed, but it's not very confident either. Okay, what we're going to do is I've got more to talk about, especially as it applies to what we're seeing from a marketing perspective. And there is clearly some volatility and a lack of confidence when it comes to how farmers feel about their current marketing plan. Lots to dig into. It all relates back to that current and future farm financial performance, and we'll dig into it when we come back. You're listening to RealAg on the weekend. We're enjoying ourselves. We're wrapping up the week. We got a whole lot more here to talk about on the show. You're listening to 650 CKOM, 980 CGME, and we'll be back right after this.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
There's a reason we call it the Corn School. Videos on everything from planter setup to weed control, field trial results, and the latest yield strategies. The Corn School on RealAgriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from RealAgriculture.com, or as a podcast in your favorite podcast app. Check out the latest Corn School episode today.
And welcome back to RealAg on the weekend. Co-op knows your community because we live here too. Our teams are your trusted partners with a range of expertise to help support your entire farm operation. Co-op, here for your farm, here for your family. Learn more at co-op.crs/farm. That is co-op. Okay, we're continuing talking about the Canadian Farmer Sentiment Index results for January. And so far, we've talked about the current and future farm financial performance, farmers' outlook on the overall health of the Canadian ag economy when we look at the next 12 months, the next 5 months, and we've been talking about the negativity that's out there, okay? And for Western Canada, I think it's a pretty clear explanation as I talk to farmers in our audience. And that has to do with the drought, right? And not really feeling comfortable that Mother Nature is truly a partner here at this point. And that goes for ranchers, of course, with grass, and that's also people that are involved in cropping operations and the mixed farms, of course, in between. Farmers feeling that fertilizer prices have not come down enough. Farmers feeling that equipment has been quite sticky from a price perspective, especially on that new inventory, for sure. And yeah, it's digging into the margin as we've seen the commodity complex really, really fall off. Canola, wheat, for sure, corn. It's quite concerning. Okay, and I should mention, if you want to check out the video of analysis that Justin Funk and myself from Real Agri Studies did for these results, you can go to RealAgriStudies.com. And over the next number of weeks, we're going to be writing news stories and diving deeper. Because I'm giving you right now the aggregate numbers, basically the full results, the 100,000 foot sort of stuff. And on a weekly basis, we're going to be digging further into, like, how do farmers under the age of 35 view their current and future farm financial performance? How about farms under $500,000 in revenue versus farms above $5 million in revenue, and a whole bunch of other stuff like that. Some interesting, and one of the coolest, like the most, and it's a big question for me when we look at the sentiment, because we're asking questions very similar here to the CME Purdue Ag Economy Barometer in the U.S., so we can do some really good comparisons. Canadian farmers much more pessimistic at this time than their American peers. Actually, American farmers are actually in the positive. Well, Canadian farmers, like we've talked about, at that 67, 62 on the current to future indexes, so more negative. And we're trying to dive into and find reasons why. When I've been asking audiences that question, what I continually hear is U.S. farm subsidies as one of the reasons. Maybe it's just culture. Canadians are culturally a little bit more negative. Americans feeling a little bit more bullish and more like it's going to be good, a little bit more optimistic in nature. I don't know. I'm continuing to dig into it, and I appreciate if you do have any thoughts on that. Send me an email, shaney@realagriculture.com. Let's continue looking at some of this data here. And now we're going to talk about the markets, okay? And there's two ways we look at the markets in the Canadian Farmer Sentiment Index. One, we look at the confidence in marketing crops. This is essentially trying to measure how much confidence do you have? Because whether the market's going up or the market's going down, do you have a plan? Do you feel good about it? Right? I think that's an important stat. And of course, we look at, are farmers feeling bullish or bearish? Is now a good time to sell or a good time to hold when it comes to your outlook on selling crops? When we look at the outlook on selling crops, no surprise to you, it has bounced all over the place. In September of 22, we were at a 128 out of 200. We were clearly in bullish territory. Only it basically by last May, we were down to 70. We'd been cut in half 9 months later, okay? And then the next month, which was July, boom, we're like way up to 138. We doubled. And then we've gone downwards ever since. It is like a roller coaster, everybody. It's a roller coaster of major, major significance. Now, through all that, what we've seen is the confidence that farmers have in marketing their crops has slid downwards. We're actually right now in January at a 75 and a 200. It's the lowest rating we have had since we started doing the Canadian Farmer Sentiment Index back in September of 22. So not only are farmers bearish right now at 95, just below that neutral line of 100, but they're also losing confidence in their ability to market their crops in these conditions. Added on top of this, okay, we asked farmers, if you compare the 24 crop versus the 23 crop, do you feel 24 is more risky, less risky, or same? Farmers told us 75% saying 24 crop is more risky. So you got a more risky environment, you're bearish on the markets, and you have lack of confidence in marketing your crops. You can see how all this is adding up to the fact that farmers are feeling weakness when it comes to their current and future farm financial performance. When the market was going straight up, it was easy to have confidence in the market, or in your marketing plan, I should say, right? When the market, is it a case of, do I sell today to buy some more fertilizer or maybe build that shop? Or do I wait, a week and make more money because the market's just like, it's like a hockey stick? That's not the kind of environment we're in right now. As we continue to slide to the downside, it's been very concerning for farmers. You're out there, you're in the audience. I've been getting emails from you. I've been getting emails and phone calls from our RealAg radio podcast listeners, visitors to RealAgriculture.com. A lot of concern out there right now, okay? And also, I think all of this comes together and makes a lot of sense when we really connect a lot of the dots. So I'm hoping when we do this in April again, we have found, one, the market has sort of found a bit of a bottom here, and we have some base to build from. But also we find a little bit more confidence when it comes to the marketing in those conditions. The last thing we ask in our Canadian Farmer Sentiment Index is the state of mental health. And this is an interesting one too, because I just talked about how we've seen volatility, a roller coaster, up and down, like the drop of doom. Like in the drop of doom, or there's that ride at Disney where you go up and it just brings you right down as quickly as it can, and your stomach moves into your throat. That's kind of what the outlook on the selling crops data looks like. And if you find it at realagristudies.com, you will see that. Mental health has stayed very stable. We've, for the most part, been below that neutral line, but we have been really between 90 and 100 the entire time all this has been happening. I actually do find this also encouraging because it shows that we've got some stability in how farmers are feeling, even though they've been losing confidence, even though they don't feel good about this is a good time to make investments. They don't feel good about the ag economy over the next 60 months. They don't feel good about their current or future farm financial performance. Mental health has not been volatile. I think that's a major positive. So that's my breakdown of the general results of the Canadian Farmer Sentiment Index. And I would love you to go to RealAgristudies.com and watch the video that Justin Funk and I do. You can look at the graph that explains some of this data with some of the directional arrows that I think you'll find very fascinating and assist you in understanding what we've been talking about here. And stay tuned, because every week I'm going to be publishing new stories at RealAgriculture.com, digging into what some of the deeper demographics are telling us, and how farmers in a whole bunch of different categories, and the way we slice and dice them, how they are feeling about the current farming environment, what they see as the issues, so on and so forth. So really looking forward to it. And like I said, if you have any feedback on this, would love to hear from you. Haney at RealAgriculture.com. Okay, when we come back on RealAg on the weekend, what we're going to do is we're going to dig into the used equipment market. When I was in Cambridge, Ontario earlier this week, I had a chance to catch up with Machinery Pete. Of course, you know him very, very well from MachineryPete.com and Machinery Pete TV. And he'll be with us when we come back here on 650 CKOM and 980 CGME.
Get all the information you need to keep your pulse crop healthy and profitable with the Pulse School on RealAgriculture.com. The Pulse School is a free YouTube video series covering agronomy, research, and more across a host of different pulse crops. It's also available as an audio podcast wherever you download or stream your favorite podcast. Check us out on YouTube or visit RealAgriculture.com. The Pulse School, brought to you by BSF Canada.
The Canola School on RealAgriculture.com is your one-stop shop for everything a canola grower needs. Check out our free video series on YouTube for all the latest in canola agronomy, research, marketing, and more. Don't have time to watch? Download the podcast version of the Canola School on RealAgriculture.com or anywhere you download your podcasts. Stay on top of all things canola with the Canola School on RealAgriculture.com, brought to you by BASF and Invigor Hybrid Canola.
Whether you're seeding, harvesting, or anything in between, the Wheat School on RealAgriculture.com has you covered. Timely agronomic information from industry experts available online anytime. Give your wheat crop a good start and a great finish with the Wheat School on RealAgriculture.com, brought to you by C&M Seeds, Syngenta Canada, and the Alberta Wheat and Barley Commission.
One of the reasons why farmers are not feeling great about their margins, or one of the complaints I hear out there, and when I say complaint, this is real, is the price of machinery. And we've got new machinery, we've got used machinery, and one of the really North America's experts when it comes to used machinery pricing is Machinery Pete. Yes, from MachineryPete.com and Machinery Pete TV. And I ran into Greg Peterson at a CCAN event in Cambridge, Ontario. We were both speaking at the same event. So we took some time in the hallway to discuss and get a bit of an update on what's happening in the machinery market. Here's our discussion. Okay, you were, of course, today talking about what's happening in the machinery market. We're clearly seeing some tightening of margins on the farm, some dipping even into the red in cases. How is all this having an impact on what's happening in the machinery market?
Well, it's a great question, Shaun. I mean, 34 plus years I've been tracking this stuff every day. I sort of look at it like sentiment doesn't matter. It's just, hey, put this asset up for sale today in Ontario or Minnesota or Texas, and what it'll bring, and then how does that compare? So I think definitely some changes. We're beginning tilt away from a seller's market, probably the strongest seller's market I've ever seen extended for 3+ years, towards more of a buyer's market based on supply has changed on the dealer side, and then also changing realities with like you said, the profitability for Joe Farmer.
Are we seeing the volume of transactions slow down? Because that's something we talk a lot about in the real estate market or the land market, is like, values are still pretty high, but we've seen a slow down. We're getting less liquid. Is that happening in machinery?
Yeah, I think you could probably make the argument. I mean, we do track raw number of auctions, and I would say that end of 23 was extremely busy. I think a lot of farmers may be pushing forward a little retirement or downsizing to capture the year-end buying heat, so we definitely saw that. Even in January is always slow. But, it's just I haven't noticed a drastic drop-off in the number of machinery sales. But then by the same token, I haven't noticed a huge increase either. So,
now, all machinery is not created equal. There is differences. When AEM reports their numbers on new machinery sales, they've got it broken down by horsepower on tractors and combines and things like that. When you look at the used market, where are you seeing strength versus where are you seeing weakness from a machinery type standpoint?
Well, the tractor market as a whole has been exceedingly strong, stronger than you would have thought structurally, given the increase on the dealer used lots. But it's just been, good condition used tractors have been fantastic, selling very well. I think because of what's happening on the new side, the multiple price increases, aggressive price increases, that always pulls up on the value of good used. If you drift into pre-def, that thing has almost become unglued, how just unhinged the buyer demand. It's leached over from the tractor market into the combine market. I never thought I'd be writing columns about trends with pre-def combines, but that became a thing last year. I think what's interesting to me is now if we get on the dealer side of things, they're very conscious of what happened a decade ago when used values fell like a rock in end of 13, 14, 15. We're talking 20 to 25% year-over-year drop in value. And everyone tends to think the used values will fall the same this time. But there's structural differences right now. One is the number of dealers versus 10 years ago. The consolidation has been breathtaking. So now you don't have a 2 to 6 store dealership. You got a 30 to 70 plus location, and they're capitalized. That's a whole different animal. And so we saw them get very aggressive and push excess late model used onto the auction market proactively last summer, July and August with combines. So like on a John Deere S780, we saw 400% increase in the number sold at auction. Now, Econ 101, you would say, oh my God, the auction, it must have felt like a rock. But they only dipped 15.5%. And where we see the bigger drop is the 6 to 10-year-old, the S600, and the same with other color lines in that age range. So I think they're becoming more selective buying opportunities, plugging into age-wise, what you're looking at.
One of the other things I wonder about, too, is we've continued to see some machines get larger and larger and larger, and I've always wondered, where does some of these very large combines or seed drills, where do they go in the used market? Because if I'm a really large farmer looking for that class of combine or, that 60, 80-foot drill, I'm going to buy new. I don't, unless there's a really deep discount on the used. Is the size being any sort of a factor? Are you seeing any differences?
Yeah, you just identified a truth, a reality of the farm equipment market. Yeah, bigger is better has a boomerang effect. I mean, so where's not just the second buyer, where's the third buyer, where's the fourth buyer? So now we're seeing things, if you look for sale, machinerybeat.com, all of a sudden the number of X9s on the market. Not every farmer needs an X9 combine. So when we see the flip of it, and if I had a nickel for every time someone would say, gosh, Pete, I wish they would just make, like the old days, I wish they'd make smaller equipment that I need. So then we see things like a farmer in South Dakota who lists 9570, an 09 model, for sale with us with 0 hours on it. And I was like, oh my God, I need the rest of the story. What's the scoop here? So I called the guy up. He's a seed dealer. And he said, well, my dad bought this thing. And then he changed our operation back in the day, went to no-till, just didn't use it, had beans custom done. So he said, Pete, am I nuts to ask $249.9 for this 9570? And I said, that's what I'd ask. Put the story out there. He had 2 full price offers in 2 days. Wow. Not for a collector. They went to farm with it. Brand new, a smaller combine, like new, whatever. So that's 15 years old. But we see the same, you'll see strength with 6-row planters if it's right. It's just we're splitting based on size. Yeah. And that does create a valid question on what's a 4-year-old massive, biggest combine worth or the highest horse tractor. And that's why I enjoy being on the sideline reporting on it day by day, and I can bring you the story. So, but hopefully we try and help people, make that good decision so they know, if it dropped, did it drop 20%? Did it drop 10%? And just so you know before you write the check.
Yeah, that's a good point. There's a lot of things where I say the same thing. I like to talk about it, like to report on it. I'm glad I'm not having to write the check for it. That's for sure. You mentioned the dealer, and there's less of them. We've seen a lot of consolidation in the dealer network. Any comments on the prognosis for them, like the financial health, or is it a sector that feels like they've steered through, pandemic, post-pandemic well, or are they kind of hurting right now and just trying to figure out how they keep some margin?
Well, I think the sector, obviously challenges are challenges, and it's tough, and particularly when you compare to 1, 2, 3, 4 good years, that when the market changes, it's no fun. But I think the whole reasoning behind the shift was to give a stronger financial base to these owner groups to weather these ups and downs and navigate through them differently. So to me, that change of much fewer larger dealers combined with the sea change we've seen with the whole online auction, online bidding space coming out of the pandemic, those are 2 factors working against what we saw a decade ago, that 20 to 25% across the board drop in used values. And the online auction thing is funny because, I mean, we've had online bidding for, 15 plus years. But all I can tell you, Shaun, is that when the pandemic started March of 2020, and I do my gig, I'm collecting prices, and prices went up within 10 days significantly. And there was no reason for it other than we're humans, and now no one's looking over my shoulder, and I'm going to hit that frickin' bid button one more time. Excuse my French. So then when you interjected money into the system, it's just to the point now where it's apples and oranges. So it used to be if you had an auction, you'd advertise the event. Hey, I have an auction March 2nd. I got some nice stuff. Now you're target marketing every piece on your auction, and people are finding it through sites like ours and others where they, I'm looking for an HX15 batwing mower, and I don't care where it is. I just want the nicest one. Boom, there it is. Click the button, it's yours. That, to me, yanked the whole farm equipment space forward 7 to 10 years in one swoop. So I think structurally the system, now this is speaking from a manufacturer angle, the system functions better, more smoothly, faster, maybe mimicking the used automobile sector. If you're a farmer, the danger is assuming that it'll be just like it was 10 years ago, because times are tougher, dealers always pile, that's a dangerous assumption. Because again, we saw 400% increase in S780 sold at auction in 23, and they only dropped 15.5%. And that's because buyers from all over the world are looking at these things, and that's getting that 1, 2, 3, 4 extra bids. Now they're dropping, but so those are some of the things I'm keeping my eye on.
Yeah. Before we wrap up here, is there anything else that you're kind of a signal you're sort of paying attention to here for 24 that's going to be an indication on which way we kind of head here?
Well, it's sort of the old money factor. I don't know how you verify it, but the Wall Street and those folks keep asking me about interest rates and stuff. And you boil this down, a lot of equipment has been bought with cash and land. So that's truth. And now the question is, how do we crack that nut anecdotally to when that changes? But when and if that does, then it's apples and oranges. Then you've got a different thing we're reporting on. So that's kind of what I'm watching.
Well, it's great to catch up with you. I really appreciate it. And everybody should go to machinerypete.com. And what do you got go on there? All the listings and the values, the auctions coming up. Give us if somebody hasn't been there before, give us a bit of a shout out here.
Yeah, we just want to let you type in, what you want, whatever make and model, and then show you the ones dealers have, the ones that are coming up at auction. We've got all our auction prices free there, machinerypete.com. So again, really want you to look at that beforehand, folks, before you buy, sell, or trade, so you know the hard cash, what stuff is going for. And then just our TV show and our commentary and all that stuff, that's our hub, machinerypete.com.
Great stuff. Greg, it was great to see you again.
Always great to catch up with you, Shaun.
I've got some final thoughts to wrap up this week's show when we come back. You're listening to 650 CKOM and 980 CGME.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomists, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomists with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
Hi, I'm Bernard Tobin, host of the Soybean School on RealAgriculture.com. Throughout the year, on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, RealAgriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by Pride Seeds, BASF, and Syngenta Canada.
We had some big news in Saskatchewan this week, and it involved processing and plant protein processing, to be a little bit more specific about it. So Louis Dreyfus Company has announced plans to build a pea protein isolate production facility at the company's existing location at Yorkton, Saskatchewan. So this is pretty good news for Saskatchewan as they continue to attract processing investment. You look at what's the investment that's being made around the Regina area. when it comes to renewable diesel. Of course, there's a lot of talk about plant-based protein in the global market, and Saskatchewan and Western Canada trying to be really the focal point, the hub of that. Well, this adds to it. Construction on the pea protein facility is slated to begin this year and wrap up by the end of 2025. The company didn't say how much it's going to cost or what the volume is going to be in the release, but they did say it's going to employ up to upwards of 60 people. The CEO of Louis Dreyfus said the investment is part of our plans to diversify revenue through value-added products, in this case addressing growing demand for high-quality, nutritious, and sustainable plant-based protein alternatives. Of course, the Saskatchewan government, very, very happy with these kinds of announcements, probably involved, I would assume, part of the recruiting process is usually how this does work, or the convincing process. Saskatchewan's Minister of Trade and Export Development, Jeremy Harrison, said the Louis Dreyfus announcement takes us one step closer to achieving our goal of processing 50% of the pulse crops produced in Saskatchewan. This announcement is great news for the Yorkton community and pulse growers across the province. Of course, Louis Dreyfus has operated a canola processing complex at Yorkton going all the way back to 2009. So that's big news for Saskatchewan. And I would say the plant protein market has really been getting some questions thrown at it. During the pandemic, it felt like a lot of hype that this was like the only way forward in order to get your protein intake was going to be through plants, and it was really the demise of the red meat industry. That is not what has happened. The consumer has really spoke and showed that, from a beef perspective, even with how expensive beef is in the store, consumers still stepping up and using it as a protein source. Of course, pork and poultry demand are there as well. There also is challenges, right? We've had like Merit Foods in Manitoba is basically shut its doors. We've had some issues with a company walking away from contracts on peas related to plant-based protein. That's been a real black cloud for many of you in Saskatchewan. I'm probably understating that, how some of you feel. I know some of you that have been a part of that class action suit. The other part of it, too, is that when I talk to people in the plant protein industry, they talk about how everybody judges it through the eyes of like the Beyond Meat stock. And that's an incredibly shallow way to look at plant-based proteins. That is a component. It is not the entire market. We've also got some challenges where China allegedly has dumped, when I mean allegedly, I'm saying dumped, dumped some plant-based or basically pea protein into the U.S. market that has really, really dropped prices. That's been a challenge too for food manufacturers and processors alike. And we've got a story about that at RealAgriculture.com, so I encourage you to check that out. So, well, I think, when I talk to people like Pulse Canada, I talk to the pulse industry in the U.S., this is the message I continually get. We have shifted. Where people were trying to make this really about red meat or traditional protein, animal-based protein versus plant-based or synthetic proteins. It's really not what the reality is. The reality is that plant-based protein is a nice complement to animal-based protein products, right? And I'll put it to you this way. With that steak, why not? And you're on a steak and potato, you're having a great little barbecue meal. What about some lentil soup? Or maybe some hummus, right? As a bit of an appetizer. Why not? That's a compliment. People are trying to increase their protein intake overall in diets in today's world. And obviously, animal-based protein and plant-based protein can play a role in that. The interesting part is that Saskatchewan is really a hub for both. Win for Saskatchewan. If you have any feedback on today's show, I'd love to hear from you. You can send me an email, shaney@realagriculture.com. You can also find us across all the different social media platforms. We'd love to have you call the RealAg feedback line, 855-776-6147. Make sure you check out RealAgriculture.com here over the weekend. And don't be scared to also send me that feedback about what you heard in the Canadian Farmer Sentiment Index. Looking forward to your feedback. Everybody, thanks so much for getting real and getting connected with RealAg on the weekend here on 650 CKOM and 980 CGME.